Hello guys, David here. So in this video, we will show you our key trendline trading strategy that no one talks about. So first, what are trend lines? A trend line is a line we draw on our charts that connects the swing highs and swing lows during a trending market. So here we have a clear downtrend. We have a run, a pullback, a run, a pullback, and a run. At the bottom of each run, before the pullback begins, this is what we call a swing low. At the top of each pullback, before a run begins, this is what we call a swing high. So what this means is, in an ideal downtrend, price will be making lower highs and lower lows. Now, a trend line is then applied to connect the swing highs along the top and swing lows along the bottom. So let's move on to an uptrend. Here we have a clear uptrend. We have a run, a pullback, a run, a pullback, and a run. At the top of each run, before the pullback begins, this is what we call a swing high. At the bottom of each pullback, before a run begins, this is what we call a swing low. So what this means is, in an ideal uptrend, price will be making higher highs and higher lows. Now, a trend line is then applied to connect the swing highs along the top and swing lows along the bottom. Now, this is an important point. Price won't always move this smoothly in trending markets, but we are showing you this as a reference to what an ideal trending price movement looks like. So, why exactly do we draw trend lines? The first reason is because trend lines can act as a form of support or resistance. Along the top, the trend line acted as resistance when price touched it, and along the bottom, the trend line acted as support when price touched it. Now, you don't enter trades blindly just because price has touched a trend line. You always wait for price action in combination with other factors, which we will get into later in this video. Now, the second reason we draw trend lines is because a break of a trend line can signal a possible trend change. So in a downtrend, we have our trend line placed above the trend. When price breaks this trend line, it can signal a possible trend change to an uptrend. Now, vice versa. In this moving uptrend, we have our trend line placed below the trend, and when price breaks this trend line, it can signal a possible trend change to a downtrend. So again, you have your moving uptrend. We have our trend line placed along the bottom of the uptrend. Once price breaks this trend line, it signals a possible trend change to a downtrend. And again, once this downtrend starts, we put a trend line above the moving downtrend. And once price breaks this trend line, it signals to us another possible trend change to an uptrend. Again, here were your trend lines before you had your breaks and then trend changes. Now, this is a very important point. What we just showed you is what occurs in an ideal situation, but is not the law. You need to pair these trendline breaks or rejections with key price action factors before looking for a trade entry, which we will get into later in this video. In the next section, I will share with you how to apply trend lines.